Hey folks, hope you're having a fantastic Monday. So in today's video, I want to go over a few different topics. First off, we're going to go over last week's MLS numbers. Then we're going to talk about if you are 65 or over and thinking about doing some updates to your home, you might want to take a few things into consideration. We're going to touch on the Fort Worth Stockyards and how the expansion has finally ended the litigation that's been going on for the past year. And the $630 million expansion is starting this month. And then at the very end of the video, I want to go over this month's numbers and kind of just take a quick look at that so we can see what's going on. Just so when you see those headlines, you know how full of shit they actually are. So real quick, let's talk about the numbers. So the numbers for this past week are very, very similar to the previous week. We had 8,072 homes come on the market. That was 7,239 were new listings and 833 were back on the market. We had 12,807 homes come off the market, and I'm going to pop the numbers up here just so we don't have to go over each one line by line. As I said before, the past 2 weeks have been very, very consistent with the numbers. You can see the price reductions are about the same as we saw last week as well. And you're welcome. I've noticed a trend when I make a video saying interest rates are probably not going to drop below 6%. Then the following week, interest rates drop below 6%. So like I said, you're welcome. You know, you don't have to worry about giving me a hug or any pats on the back. You can just send your business my way. And, you know, if you want, you can send me like Chick-fil-A gift cards. I like those as well. But you can see that the 30-year fixed mortgage did drop back down to 5.99%. Once again, it's going to vary on what kind of a loan product you go with and where you're sitting as a potential borrower with your interest rates. It's going to vary a little bit. But overall, we saw those interest rates drop back below the week after I said they weren't. That happened earlier this year. So maybe I'll give it a couple weeks and then I'll say interest rates aren't going to drop below 5.75%. And then maybe they will, right? I don't want to wield this power too much, right? Like with great power comes great responsibility. So I need to be careful how I use this. Now, if you're 65 or older and you live in Texas and you're thinking about doing some updates, there's some things you want to be careful of. And I actually recently found out about this, and I got to be honest, it ruffled my feathers a little bit. It actually quite frustrated me because I always known that if you bought a home and you did some updates, the county is going to tax you because you've increased the value of that property. What I wasn't aware of until very recently is, let's just say you bought your home back in 1990, right? Like you've been working, you've been paying all your taxes, and you just retired, and you think to yourself, hey, you know what? I'm not getting any younger. I've just retired. I'm going to update this house. I'm going to put the wood shop back in the backyard like I've always wanted to. So you update your whole house, you put a pool in, and you put that shop in the back. Well, guess what? You're going to have to pay taxes on those improvements, even if your home is locked in, because if you have a homestead, it's going to lock in a $140,000 deduction off of your property's value. If you're 65 and up, you can lock in a deduction as much as $200,000 and also freeze a portion of that tax that you pay every year. But also, if you're a veteran and you have disability, that's going to vary. If you're a veteran, you understand what I'm talking about. But if you're 65 and up and you do those updates, guess what the county's going to do? They're going to say, hey, let's say you have a $400,000 home and you've maxed out your 65 and plus exemption. So therefore you're being taxed at a rate of $200,000. But let's say you do all these updates and the county's like, hey, you've just improved your property by, I don't know, $60,000. And let's say you're in an area where I sell a lot of homes and your tax rate is at 2.4%. Well, you might be paying an additional $1,440 every year or an additional $120 per month for those upgrades, if you kind of understand what I'm saying. I might go into more detail about this in another time. But like I said, if you're 65 and up, just understand that if you do some improvements to your property, especially where you're pulling permits, there's most likely you're going to be paying more in taxes, which is great. You know, government just squeezing us even more. Now for the stockyards, man, this is actually pretty good news because to be honest, I was down there a couple weeks ago with my family and it's looking a little bit rough. It really is. They could use some improvements. So if you haven't heard, there's a $630 million expansion that's going to go into effect, but it's been caught up in litigations for about the past year. I don't know. I guess one of the developers' wives snuck away with the other. No, I'm just kidding. That didn't actually happen. It would be funny. It wouldn't be funny for one of the developers, but that would be kind of funny. It'd be like a movie if something like that happened. But anyways, back on topic. So the expansion's been given the thumbs up. It's projected to be completed December 31st of 2032. They're going to be adding 300,000 square foot of commercial and retail, 500 new hotel rooms, 295 unit apartment. Now, when you read this, right, if you really do a deep dive in this, they say housing, they're adding housing. And kind of a side note, as we move through the years, I want you to be really careful when you hear anybody in the government or any developer talk about housing, because they say it in a way, and maybe it's just me and maybe I'm being biased, but maybe they're doing it on purpose. But they reference it as housing, and I really expected there to be some, at least condos or townhomes or something like that nearby. No, it's going to be all rental, it's all hotels, and it's all apartments. So once again, 500 new hotel rooms, and they're going to make a 295 unit apartment. They're going to add 1,300 underground parking spaces, and they're also going to be putting $15 million to improve the 𝐾 Coliseum and where they keep the Longhorns. Now, there's something I want to talk about real quick. As basically being a Texan my whole life, my parents were in the military and I moved here when I was 3, so I'm going to call myself a Texan. There is a difference between a Longhorn and a Watusi. A Watusi, think of that as like an African-American cow. It's not that we don't love them, but they're not the same thing as a Longhorn. A Longhorn is a Texas cow. So let's get that real clear right now. I don't want any more confusions. I will fight you if you think I'm wrong on this, all right? A Watusi is not a Longhorn. But anyways, they're going to improve the area where they're keeping the cattle. And if you've walked down there recently, you can tell it is in dire straits of some repairs. So that's going to be a really good thing for years to come. Hopefully, I will say I'm a little bit nervous though. Just growing up in this area, I'm seeing the area change. It's kind of losing that Fort Worthness, if you will. So hopefully with this massive expansion, we don't lose that, that Cowtown feel. I don't want to go into a whole bunch of detail about how some of the things are changing, but hopefully they keep that Fort Worth feel with this whole expansion. Now, let's talk about the numbers so you can really set your mindset for some of the headlines you're going to see. You're going to see a lot of things, talk a bunch of doom and gloom, but let me open up my screen and let me show you exactly what I'm talking about. So here we are inside the MLS, and I want to really emphasize this because what we're going to see over the next few years, and really we've always seen this, is a lot of times they spin things in a negative way because negative news gets more views. But I just want to give you the facts here so you can understand what's really going on. So year over year, the number is down. We can see last year at this time, the value is at 360. And this once again is for all of MLS. And then we can see over here, it's at 350. So they could paint the light that the values are dropping. I would just say the values are pretty much holding steady with some variance in here, right? Like I can go in here and really pick this apart. Like if I look at new construction versus pre-owned and resale, but we're going to look at everything. Now, if we go 3 years back, well, my face is blocking it here, but it's the same value as it is today. It's at $350,000. And I'll be honest, if you've bought a home in the past 3 years, there's a good chance that you're not going to make any money if you sell your house. In fact, I've already had a couple closings this year where people bought during that time frame and they did have to bring money to the closing table, but it's very different than what we saw going into 2008 because most of these people put pretty large payments down when they bought the home, so they're not upside down as much as they were as we saw in like 2009, 10, 11, and 12. These people have, I don't know if you'd call it equity, but like I said, they put money into the property. And some of them they've actually taken money away from the closing table, but they didn't necessarily make any money because let's say you bought a home for $350, but you put $100,000 down and you sold the home for $300. Yeah, you didn't make any money, but you didn't have to take any money out of pocket, if that makes sense what I'm saying. So that's for the past 3 years. Now let's take a look and see for the past 10 years. So you can see that the values, relatively speaking, outside of those that crazy COVID time frame, you're still going to be in a good position. So if you're seeing news outlets where it's kind of doom and gloom on the values, don't get too down on yourself. Now, another thing I want to take a look at here is going to be the month's supply of inventory. So you can see we saw that big increase through the year. We saw a lot of homes come off the market. We did see quite a few homes sell, and you can see where we are now, where the entire MLS is sitting at about 4 months supply. Newsflash, folks, that's not a buyer's market. That's a neutral market on the edge of a seller's market, okay? And depending on where you're looking to buy, you might be buying in a buyer's market, a seller's market, or a neutral market. Now let's take a look at the past 10 years and see what we can see there. Now, we all know what happened during the COVID years. We dropped down to no inventory, and we've just built up since then. And then let's take a look at the max there, right? So we're still not in a situation where it's really, really bad. And I'll also argue that where it shows this, you have to understand that the entire MLS, the MLS has expanded over the years. So these numbers aren't exactly scientifically perfect. So let's not jump to too many conclusions. Homes are still selling. Values have flatlined for a little while, but your location is going to be the most important determining factor on whether you are or aren't going to be able to make money on a sale if you've bought in the past 3 years. If you bought pre-2021, for most people, you're going to be in a really good position. But anyways, that's the end of the video. I hope you got some value out of it. And the best compliment you can give me is a referral. So send this video to a friend, family member, maybe somebody that you just want to annoy to watch a 10-minute video. You could send it to them as well. But until next time, I hope you have a great day. Or don't. I guess it's up to you.